If you guys join my Discord channel or if you take a look to the trading journal here in the comment section below, you will see substantial profits every day. These profits are the result of my two intraday strategies. The first one is 81 strategies, which I've already explained to you in several videos. But if you want to take a look, I suggest you to start from here, I suppose. The second one is the 5M strategy. It is a simple strategy, but there is always a minimum of discretion. And with this strategy, with these two strategies, I complete the set of my intraday trading. Okay. So this is the first video with which I will explain the 5M strategy, but I want to start from one of the most important things that both strategies have in common, and above all, it is a key factor that you can use in any kind of strategy. And what I want to tell you is how to identify the areas, the key zones where price will react in the 99% of the times. I'm not saying anything absurd. I mean, there are areas in which price usually often reacts, okay? Just because these areas are part of a natural structure of the market, okay? What changes is the intensity of this reaction. I mean, the price can react so much that it can change the trend, or it can have a big enough reaction that allow us to trade, or can have such a small reaction that you can see only in 1 minute time frame. Okay, but they all are important because they give you a fundamental statistical edge, okay, in the market. So I only enter or exit the market, I only open or close a trade only when the price is within these zones, okay? So let's go on the chart, and I will show you how you can spot them. Okay, so guys, we are on 1 hour time frame on our S&P index. I only trade the S&P index future, okay, on intraday. So we all start, I suppose, using support and resistances like this, in this way, okay. Then we started talking about support and resistance zone, okay. Then we probably begin to consider a supply and demand zone, okay. They all are valid, very valid concepts, but they all are elements that we see on the graph, because it is the graph that tells us, okay. And it's okay, they all are valid concepts, but we often forget about a really basic but very important concept. It is not the graph that creates the market, okay. The graph is only the translation of the market, okay, that we can see. So drawing horizontal lines and boxes, like in this case, based on what price did in the past, it's okay, but it doesn't tell me why I should really consider these zones in the future. It doesn't tell me what triggered this reaction. Okay, so basically it doesn't tell me what is behind this graph. There is a much more effective way to identify these zones, and it is a way that is so much closer to the method, okay, that big boys, institutional big boys out there do use. And this method is volumes, simply volumes. So there is nothing better than volumetric analysis to identify these zones, and this what I'm going to show you now is what I really do every morning, and what I share on my Discord group. I create this template, which are the indicators. The first one is vertical histograms volume here, okay. The second one is the volume profile, the session volume profile. So it shows us the concentration of volumes for every session, okay. The other indicator is another volume profile, but so much larger, in so much larger period that you can choose on the settings. So I have 500 number of bars and 200 look back period, okay. So this can give you a macro scenario, okay, analysis about volumes. The last indicator is engulfing candles detector, that I don't use it to identify the engulfing, but I use it to identify in a very quick way, very fast way, the impulse, okay, and the high volume candle, basically. So I identify the momentum, okay. So what to do? Let's have an example, okay. Taking the replay mode. So here I take a day. Okay, so what I do is just highlight the zone in which, in the session volume profile, that the session volume profile indicator tells me to identify. So just take the zone in which the POC, so the point of control, which is this red line, is highlighted, okay. So in this case here, okay. You can do this on 1 hour time frame, on the 30-minute time frame, if you use an intraday strategy, okay. Obviously you have to keep in mind the macro scenario, okay, using the higher time frame, so 4 hour time frame and the daily time frame as well. You can also take the other areas in which there is no POC. There are very important as well, and you have to take the areas where there is a clear increase, okay, of a horizontal volume. So to be clear, not here, just because you have this big difference, okay, in the horizontal volumes. and I only take the zones that have not yet been filled. What does it mean? For example, I will not take this zone. Okay, why? Just because, as you can see here, the zone is is filled. Okay, so they are not so much order here that must be mitigated yet. So I only take the areas that the price has not yet touched, okay, after the volumes are have been created. This is because I have a much better chance that the price will react, because these are all volumes or zones in which there are probably volumes inside the zones, okay, that must be mitigated yet, okay, must be open, okay. Then I do the same thing with the volume profile, so the bigger volume profile. In this case we are on a replay mode, so maybe it doesn't work, okay, or maybe take the actual data, but anyway, it doesn't matter. Most of the times, obviously, the zones that we find using the session volume profile are the same, or the ones that the bigger volume profile identifies. So, but this is a good confirmation. I mean, this means that the zones that we found are very good zones, okay. Another tool, very important tool that I use is fixed range. So you can find it on the volume indicators, okay, and it's very important. I use it in case of swings, so I try to identify the main area inside the swing, okay, and I use it for to identify the retracement of the price, okay. Or, for example, so in this case, or I use it, let me remove drawings, I use it in, let me show you an example, maybe we can delete replay mode now. I use it to, I mean, for example here, okay, this is the zone, okay, but it's a very huge zone, so if price will break here, okay, I will probably suppose that will go inside the zone, okay. So I use it fixed range to find the real zone inside this range. So I take this range and using fixed range, okay, I see that the zone is this one, okay. So to find the so much more precise zone, okay, and I wait for the price to reach the zone to think about opening or not a trade. One last trick is are the wicks, okay. So for example here, so the wicks are a clear signal of a very important volume, because the chart is telling me that the market is rejecting the price, okay, like in this case. So if we have this long wick, it means that here we have volumes, okay, here we have volumes, okay. So for example, if we highlight this zone, okay, here I take this zone and not here. I don't care about this part, okay, I mean this part, okay. Why? Because it's already mitigated in the past, so I take only this one, okay. Here there are orders that must be mitigated yet. In fact, price, as you can see, reacts very good here and go down, okay. So the good volumes area will be this one, for example, okay? And now here, for example, the last zone will be this one, okay? So I know that price will probably try to get all the orders here, all the volumes here, okay? So if here they're already taken, so I wait for the price inside this box, okay, above this maximum, okay? And basically this is the liquidity. Here we have a lot of liquidity that must be taken, okay? One last thing is, if we go on the 30-minute time frame, on 1 hour time frame, and we take a look to the week, maybe here, okay, if you combine the week with the fixed range, so we go on the 5-minute time frame, this is the week, okay, this is the week on the 30-minute time frame. So we take we use a fixed range to highlight this zone, okay, and better highlight the zone, okay. So I will probably suppose that price will react here in the future, and in fact price perfectly touch the zone and have this big reaction, okay. So basically these are the 3 tools that you can use on TradingView to better identify the zone, to better find the zone, and trade this zone. As you can see, they are very strong. It's a very potential tool. In the next video we'll tell you about how you can translate this kind of analysis using the flow chart, okay, which is another very important tool that you must have for your trading. So if you guys like this video, please thumbs up, subscribe the channel, ring the bell, same all stuff I know, but everything I do it for free. So I really appreciate if you help me to grow my community, okay. One last thing, join my Discord channel, which I share every day my trading ideas with you, okay. Thank you, see you in the next video.